This is Randy Finney with the right side of the chart, and today is Sunday, April 10th, 2016. In this video, let's change gears from the recent focus that I've had on the U.S. markets. The U.S. markets have really done nothing in weeks now. The near-term trend is still bullish. Although, well, I should say the near-term trend is sideways, indeterminable. And I'll get to that in a minute. We'll look at the 60-minute charts. I've done quite a few longer term updates on the U.S. market, so nothing's really changed at all in the longer term picture, so no need to really spend any time there. What I wanted to do is take a look at some of the non-U.S. markets, and the theme really here is that some of these commodity-dependent countries, such as Russia, Canada, Australia, look good right now from a technical perspective. And I'll get into the longer term charts and both the daily and the weekly time frames here in a minute. We're going to start out, we're on RSX here, so I'll just go with this one for now. In fact, member Double R on the website, he or she had asked me my opinion on a couple things. Double R likes to trade the leveraged ETFs for Russia and China, and asked my thoughts. And I put up the chart on China. I used FXI, and I don't know if I used the SSC. No, I just put up a chart of FXI, I believe. But we'll get to those in a second. And I meant to follow up with RSX. This is the Market Vectors Russia ETF. And as you can see here, we have a nice, clear, defined downtrend line. This white trend line here, 1, 2, 3, 4. So numerous reactions there, and a recent breakout. And since that breakout, prices have been consolidating. So far, healthy action because we back-tested the downtrend line several times, and that's held. Prices are above there. And really what you'd want to look for is a break above this sub or minor downtrend line that's formed since sort of a parallel or a descending channel with a parallel trend line to that primary downtrend line there. So something to watch for, and if and when that gets taken out, these look like your next upside targets. I haven't zeroed these in, but that's the roughly about the 1790 level, and we're at about the 2075 level here on RSX. And again, I don't use the 3-time leveraged ETF charts when to trade. I use the one-time non-leverage or the actual index itself because of the distortions, the price distortions that you get when looking at the leveraged ETF charts. So that's it in a nutshell for RSX. Looks pretty good. Bullish divergence confirmed that low. You can see, so the pattern looked like a large rising wedge. Large falling wedge, bullish falling wedge. Either way, you had that well-defined downtrend line and this divergent low. Price is making a lower low right here versus this point back in late 2014, with the MACD clearly making a higher low, and the RSI making a higher low. That is bullish divergence or positive divergence. So there are your targets, and just a glance at the weekly chart, you can see this is the same pattern, that wedge type pattern. That divergence shows well on the weekly time frame. It spans over about a year, so nice divergence. And it should be no coincidence that this rally that we've had off the lows in Russia it really coincided with the big pop in oil and gold stocks and things like that. The commodities rally that we've had in the first quarter this year. So that's the story. It was quite extended, as I mentioned, to get there. So it's consolidating now, as long as it holds that level on a back test. And let's see if I mention this support level here, 1580. You have numerous reactions. You have a reaction high, reaction from above. You have a gap right there, some gaps here, reaction from above there, and several reactions plus a gap right there, a couple gaps. So this is a pretty solid resistance level here, 1580, and you'd want to see that. I don't want to see that give way. I don't have a position in this now. I may take one. I might add this as an official trade idea. Just right now being a little cautious because I see some mixed signals, and I'll get into that as I go through these charts. So again, those are the levels to watch. And if we get through there, I showed you the overhead horizontal resistance levels on that daily chart. This is a weekly chart going back 10 years. So this is 2007. Here's the highs back in 08. And you can see this blue downtrend line, it may come into play as a primary downtrend line. We've only had a couple reactions off there yet. So if and when we get there, that would be a third reaction, something to look for. This yellow downtrend line, we do have already numerous reactions, about 2 up here, a couple more down here. So if and when RSX kind of clears this level, maybe needs a little bit more consolidation, maybe not. Watch that short-term downtrend line that I showed on the daily chart. And of course those intermediate targets that I posted there with the horizontal lines. But if and when we get up here, this is a very formidable horizontal resistance zone, about 20, or resistance level, about 2093 or so. But you'll have this yellow downtrend line more than likely come into play first. I say more than likely because downtrend lines, because of their negative slope, every day as time goes on, they come in at lower and lower levels. So unless we somehow had a huge explosion upwards in prices to get there here within the next, what is that, end of May, so less than a month and a half or so, and that's possible, but unlikely. We'll probably get to this yellow downtrend line first. So remember, when trading off the daily time frames, always keep an eye on the longer term time frames as well for resistance levels that you might not see there, because this one may come into play. So that's Russia. Looks good from this perspective. I can't pick that chart apart. Let's go to China now. Double R had also said he or she trades China, so I put up the chart of FXI. This is a long-term weekly chart, and you can see this very steep rising wedge with a recent breakout. There's a lot going on this chart, a little bit busy, but for the most part, let me jump over. Sorry to do that to you. Let's just jump over first and start with the daily chart. And this is why I use those multiple time frames to confirm. So from the daily chart, we can see, starting with this reaction up here, numerous reactions right here on this downtrend line, very well defined. And we had this recent breakout, a lot like Russia. We had a strong surge off the bottom, quite extended by the time we made this breakout, and that's one reason the FXI had to consolidate. This was also a very formidable resistance level, about 34.28. You can see a gap right here as I go back in time. This gap, reaction high from above, another reaction high from above, and we even have some reactions here all the way on the left of the chart. So that will be, if and when we break above there, that will be a pretty bullish event right there, taking out the 34.28, call it 34.30 level to be safe. And I could draw some support here if I put a horizontal line. One possibility is FXI may need to come in and backtest this downtrend line, and I'll get to that here in a minute on the weekly chart. But we might, the breakout might hold, but we might need to come back and backtest at a lower level before powering on up, making another run at that level there, the orange line, maybe a brief pullback, and then boom, finally a breakout. If that is the case, we can draw. We have. Oops, got to turn off that tool. Let's try this line now. Okay, we have a couple reactions here from above and below, and this line is at the, I'll just put it up here for you, 31.35 level. So that would be a nice to see a pullback there. Now that would have to happen pretty quick, because here we are today, and we'd have to drop pretty sharply to have that coincide with a back test. It's just one level to watch. There's some more support. This support runs really all the way down here. So again, something to watch for. So we're kind of banded, if you will. This is why I don't have, I'm not personally taking a position or putting this on as an active trade idea right now, because we're in sort of no man's land, pinched between support and resistance. And we might have to work a little sideways to down for a while to work off the overbought conditions there. But I just wanted to mention that daily chart. See the divergence there. Looks good. Here's the weekly chart. One thing on this weekly chart that I'm not crazy about, and this is what I alluded to a minute ago, that I am seeing mixed signals here, is that I don't see any positive divergence. You can see the PPO, which I use on the weekly time frame, making a lower low with prices, so you don't have divergence there. You do have the divergence on the RSI, I'll give it that. And there's that same wedge just drawn out here on the weekly chart, and the breakout and the resistance level above. There's a lot of lines here you don't need to be. Well, this one may come into play. This was a symmetrical triangle pattern back here, and there's another potential resistance level. So like I said, sort of a mixed picture. Net, I'd have to say I'm bullish on that chart. Cautiously bullish, but again, not a strong enough opinion to take a position, at least not now at this point in time. Now let's look at the SSEC, Shanghai Composite. We'll start with a weekly chart because that's where I was at. I don't have this one marked up. So let's go down to a daily chart. and this one I do. Let's move that line for a second. You can see the same a nice falling wedge pattern here. Here's the downtrend line, well defined. And on this one, we actually were just rejected. So there's another reason I wouldn't go long right here on China. The SSEC, Shanghai Composite, has just turned down on this wedge. So this may have a little more work to do here. You do have the bullish divergence in place. See the positive divergence down here on the MACD and the RSI. But the possibility is there that we might need another thrust down. Certainly wouldn't take anything that's right at resistance. We have that horizontal line you can see very well defined. If you look at this horizontal line going back here, reactions, several reactions there, reactions right here, recent reactions, boom, plus a downtrend line. So it only makes sense to give it a little more room, wait for a breakout of that level before going long. Otherwise, this one may very well need another thrust down inside this wedge. Maybe to this point I have support here. Maybe we go down there. Maybe a whole nother move down to test the bottom of the wedge once more. That would mesh more with the symmetry, not the symmetry, but where wedges break out. Usually, closer to the apex, which would be off to the right of this screen at this point, where the two lines converge. So there's a possibility there, and that would probably take out. It actually wouldn't have to take out the divergence. Let me look at that. If we could see this MACD roll over again, come in and make another higher low right here, keep that divergence intact. Same with the RSI. The RSI has plenty of room to go. So there's a possibility, another thrust down. And what this line here I had was just a sort of a near-term uptrend line to watch. It looks like it just may be cracking. This is an end-of-day chart, so China's trading now, but I don't think this chart will populate until tomorrow or later today. So there's just something to watch for, see what China does. Sort of actually a wedging type pattern, if you will, within the larger wedge. So you can draw it that way. And so that, again, is why I favor maybe one more push down. But respect it either way if you get a breakout. All right, enough on China. Let's move on. Let's take a look at my neighbors to the north here. And this is the TSX, a Toronto Composite. And this is pretty bullish. This is a daily chart. You have a very well-defined downtrend line. Look at all the reactions on this white downtrend line. Here, throughout there. And a breakout in what appears to be, I'll move that away for a second, a bullish pennant forming here. So this flaggish type pattern. And what I did with this line, that just takes the move, the flagpole, if you will, the impulsive move leading up to the formation of that pennant, and then you would place that at the lowest point. And if it broke out, that would project up to this area. Not necessarily not saying that would be my price target. I have major resistance a little bit above that. So far so good. Now we didn't have bullish divergence at that low on the MACD. We almost did. We made a slightly lower low. If it was equal, that would be considered divergence still. Close enough for government work, to be honest with you. I mean, the MACD line barely pierced through there at parallel, so you could call that a divergent low, and you definitely had divergence on the RSI. Now, however, that already played out. That played out for this initial thrust up. And a lot like China, it was very extended to get there. We did have one reaction along the way. But then from that point, we thrust it up, challenged that downtrend line, pulled back, and then powered right on through it. So in other words, TSX has gotten a little bit ahead of itself. And again, this is maybe enough consolidation. We've consolidated for several weeks now, or a couple months. And so if you're trading that or any of the Canadian stocks or other exchanges, keep this one in mind and watch for resolution of this flagging pattern. Let's take a look at the longer term chart, see what I have here. This was a bull market uptrend line from 2009, this orange line. And, Canadian stocks have been in a heck of a bear market because that's a very commodity dependent country. And you can see about a 26% drop. So, enough for a bear market, enough to wash out some of the excesses there. But looking at this chart, I had these two lines here for a while. This was a target. I mean, this line was created back in 2013, 3 years ago, in April 2013, right here. This defines numerous reaction lows. and I don't see it. There's not any. It's not that I don't see it. It doesn't exist. Bullish divergence, at least not on the PPO here. PPO's made a lower low. We do have about an equal low on the RSI, so you could call it divergence there at this low. I'm talking from this point here to this point. So again, I would have absolutely no desire to short the Canadian markets. Um, if I had to go long or short, I would prefer to go long, but I don't have a position or a very strong opinion in it this time. But there are some interesting levels to watch. And one of the things looking at the PPO, when the PPO, especially the 9 EMA, the white line here, when that is above the zero line, that is typically a bullish trend, and when it's below, that's a bearish trend. And we're still well below, so we're also struggling with that 50 level on the RSI. So there's still some work to be done to firm up the bullish case here on the TSX. And overall, it's hard to argue that the primary trend is now down. The TSX peaked back in, looks like the third quarter of 2014. That's where the highs were, and since then it's been an unmistakable downtrend. So some recent bullish technical developments, absolutely. Will that be prove to be just a counter trend bounce in a larger ongoing bear market? That's yet to be seen. And if so, we could go all the way down here to this support line that I have there around, goodness, 11,200-ish. If I about 11,200 roughly, and that'd represent about another almost 17% drop from current levels. So one to watch for, but again, like I said, some mixed signals there, and I would, at least in the daily chart, watch that. All right, what else? Let's look at Australia real quick. This is a downtrend line. I'm not crazy about this daily chart, so I'll spend just a minute on it here. There is a divergent low. Price action was a little sloppy through this downtrend line on the top that I had drawn, but I'll draw prices here making a lower low against the MACD, making a higher low, as well as the RSI. So there's your bullish divergence. So you don't even have to use a downtrend line. If you do, you could call this a whipsaw signal or a false breakout. And you could call this a legitimate breakout with a backtest right now. And if this backtest holds, meaning if it is successful, then you expect the next leg up in the Australian equities. All right, so let's take a look now at the weekly chart. And this is the big picture. You can see the uptrend line off the 2009 lows. That uptrend line gave way, and a lot like the Canadian market and most other world markets, the trend has been down and is bearish. And unlike the Canadian stocks, the Australian equities, at least by this measure here, remain in this downtrend. You can see it's I'll call it a contracting channel. I might not call this a bullish falling wedge. It's not really wedging very much. It's slightly contracting. We do have, worthy to note, positive divergence right here on the weekly chart, is on the weekly PPO, I should say, and the RSI. So that's big. That's a divergent low. If this proves to be a wedge, and it is, prices are contracting, or at least the trend lines are coming together, maybe it needs another thrust down before a breakout, and maybe that divergence will stay intact. Overall, when I see weekly bullish divergence on a chart, especially with a falling wedge-ish type pattern like this, that to me means be on lookout for a possible primary trend change, at very least a multi-month rally. So, overall, I'd have to say I'm bullish on Australian equities and a lot of these commodity-dependent countries. Now, that also goes with my theme that I've made, heading into late 2015, and let me pause. Okay, sorry, I had the F-Lux settings kick in. That's something somebody pointed out in the trading room recently, where your screen dims at night. Sun must have just went down here, so you could probably notice my screen getting dark gradually. It took me a minute to realize it. All right, I turned those settings off, so the color should be a little brighter now. All right, so where was I? My theme heading into 2016. has been that commodities are likely to outperform equities, particularly U.S. equities, is what I was referring to. And so far, that's been the case. The markets have gone absolutely nowhere. Oil, gold, silver, a lot of those things have exploded off the bottom. We're still, some of the ag commodities are lagging, but I maintain what I've said. I think the RR, the risk to return, is more attractive in commodities than in U.S. equities. By that, I mean that I think the next 20% downside is more, we're likely to see 20% downside in the U.S. equities before we see 20% upside. Conversely, I think we're more likely to see the next 20% move in most commodity classes be to the upside versus the downside. And that should benefit these commodity heavy, commodity producing countries like Canada, Australia, Russia. And, the charts reflect that. In fact, you can see how they moved in sync with the commodities. So again, there's a daily chart, failed breakout, but a breakout, a back test. That's just another downtrend line I drew to keep an eye on here. And again, let's take a look at the weekly chart. And looks good. So far, so good. So we'll see. We'll take a look how prices react there. All right, let's move on. This is the Paris CAC 40. Here's an uptrend line right here. Looks like a breakdown. This is a pretty bearish chart to me. You can see, I have a lot of lines here, and I have to apologize. I should have cleaned that up before I started this video, and I didn't. And I keep a lot of my international index charts on stock charts, and that platform isn't as conducive to doing videos because you can't zoom and annotate on that as fluidly as you can with the TC2000 program. So I plan to get those, by the way, the global index charts. I've always had a section up on the live chart links page, and I've been working very busily on the site in recent weeks, trying to restore some of the functionality, with the new theme interface. So I should have those global charts up soon. All right, let's just take a look. So I removed that. I cleaned this chart up a little. You can see this was a big, very important uptrend line back here, the one I'm highlighting. Let's just turn that another color so you can see it well. Turn that blue. All right, so you see this breakdown here, and that was, I think, a bear market in itself. I'm going to measure that move. That was 17% drop or so. And then, with the Super Mario Brothers and all that, Mario Draghi, all the money printing that they did over there, it just led this blow off top we had in French equities, and that happened to coincide perfectly with a back test of this downtrend line here, the primary uptrend line. So this was just what I call a stay of execution on a bull market, and we rolled off there, and then we had this secondary uptrend line come into play, and this one's well defined as well, a lot of reactions. And look at that, beautiful action, breakdown. I'm saying beautiful from a chart perspective, not beautiful if you're a long, long French equities. But there you go, breakdown, back test, and we're starting to roll. We have rolled over, and I don't see any divergences whatsoever, not even close on the weekly time frame there. And my guess is over time, I wouldn't be surprised to see a visit down here to the 3600 level. And daily chart, and that's a mess. I don't have anything really worthwhile to show you there. Let's look at the FTSE, London FTSE. I'm just going to focus on the weekly chart, try to wrap this thing up. All right, there's a similar falling wedge type pattern. So this one actually doesn't look so bad. You can even I can draw out here some bullish divergence on the weekly time frame. And again, I put a lot of stock into these weekly divergences. So that's not so bad. So what you're looking at, a pretty well-defined downtrend line, a breakout, and so far we've back-tested and we've consolidated and held that level. And I also had a pretty key support zone, former resistance back here, all the way going back to the 2011 highs. You can see these lines here. They had once broken resistance axis support, so it had acted as support all the way back in 2012, 13, 14, and then finally we broke below it, but we've regained that. So net, that is bullish price action for the FTSE. Hard to knock anything there. Let's say Hong Kong. We'd have to go back a little farther on Hong Kong. Yeah, this is a monthly chart, so this spans back decades here. And you can see this downtrend line, a breakdown, and not looking so hot. Here's a yellow downtrend line, or I'm sorry, uptrend line going back to 1987, and we're flirting with that now. So the Hang Seng's in a very precarious technical position. I don't have a very strong opinion. And let's look at the Nikkei. Um, longer term, we're back here on a monthly chart again. So this spans back to the mid 90s, and this was a bullish breakout. There were numerous reactions here off this trend line, this downtrend line. We broke out, and we come back to back test it. So net, that's bullish. However, we have trend indicators here that are bearish right now. Let's see what we have on the weekly chart. We have this pattern. This was a pretty well-defined uptrend line right here, and we broke down, back tested, and rolled back down. We had a divergent high, so I will say, outright that net I'm bearish on this chart. There's, like I said, some potential bullish developments, or basically that monthly chart we just looked at, and we're testing support. Going back here to this chart, we're testing that former resistance level, which now should be support as it's tested from above. However, I don't see any reason here why that support is going to hold. And more importantly, we look at the weekly chart, and this is a pretty well-defined downtrend line that was preceded by this divergent high right here. You can see the indicators. So that one looks like it may be headed lower. And I don't have anything really done up on the daily chart. This is Bombay, Indian stock market. Here's a weekly chart. Uptrend line broken. We've been moving down within this almost like an ascending broadening wedge, descending broadening wedge pattern. So we're really bounded between the two. I mean, clearly from this point, and that is all the way back in the beginning of the year, or no, beginning of 15, so I'm sorry, over a year ago, the trend has been down. And until proven otherwise, I don't see any indications here. I don't see divergence. We still have the PPO in bearish territory. We don't have any bullish divergence. So other than we had an RSI oversold reading recently, but we already played out for a bounce. And remember, in bear markets, it's not uncommon to see these oversold readings of 30 on the weekly RSI. When you get them in bull markets, they're great buy signals because prices don't stay oversold long in a primary uptrend. But in a primary downtrend, just like flip it around during a primary uptrend like we had back here, it's not uncommon to see overbought become more overbought and to see consecutive overbought readings before prices finally roll over. So, what marked the high in the Sensex, if I said that right, is the divergence here. You can see there it is, nice rising wedge pattern with a divergent top. There we go, and boom. So my guess, this blue line I have here, that's my target. You can see numerous reactions. 1, 2, 3. This was a triple top. Finally, prices broke out. And such a well-defined resistance level to me is like a magnet. We got that close. I would put good odds that we're probably going to go down there, especially I don't see the fact that I don't see any signs of reversal here. Okay, what have I not covered? I guess DAX is the last one to go here. So this is a German DAX index, a Frankfurt DAX, and we have a pretty well-defined uptrend line that so far the DAX has held. This is the bull market uptrend line coming off the 2009 lows. I should mention them on a weekly chart. You can see up here if I don't mention it, right next to the symbol in the upper left-hand corner. So we had a recent kiss of that level, but prices are again rolling over, and slice it, dice it any way you want to. The trend is down and has been down since the DAX peaked back here in mid 2015. So the DAX appears to be in a overall downtrend line coming up on with critical support. If and when this yellow downtrend line goes like I expect, I don't see any reason here. I don't see divergence in place on the weekly time frame. In fact, this would be my first target level. I really haven't put a lot of time in marking this chart up. I should mention there's also some support here. Overall, this chart, I don't see any reason to be bullish here. Looking at the weekly chart, in fact, I would be bearish on it. Daily chart, I don't see a whole lot worth mentioning. All right, just to wrap this video up, since I did mention how the commodity producing countries appear the most healthy to me at this point in time from a technical perspective. And it makes sense fundamentally if you could make the case that commodities have bottomed. Well, here's gold. Yeah, let's see if I have a better chart to look at here. No, I don't. All right, essentially this is that downtrend line that we were watching for years now, actually. We were moving down within this channel. So gold broke out, and like everything else I mentioned, it was very extended to get to that level to break out. So when that happened, as I mentioned at the time, I didn't see us ripping up another 30-40% gold, not without a consolidation. So what has happened is we came back and we backtest that level. So far so good for gold. It's holding that. And a lot of people are looking at this as a flagging / consolidation action, which so far it is. Gold hasn't gone anywhere in a couple months, but then again, it's really holding on to a lot of those gains, and more importantly, it's backtesting this pretty well-defined downtrend line on the weekly chart. So if gold does well, countries that produce a lot of gold should benefit from that. Here's silver. Silver still has work to do. We had this minor downtrend line that I mentioned taken out. We broke above it and we've held. This is a weekly chart again on silver. Strong divergences. The bullish case has been made for many months now on silver and gold. And, I've just kind of stepped away from it recently. We've been in these consolidation ranges. It was a little too much too fast. And, there was the metals are still working off those recent gains, working off the overbought conditions. So, what silver needs to do to follow the lead of gold, silver needs to take out this primary primary bear market downtrend line, which is a very large wedge. If you look at the lower white downtrend line here, that really is confirming this divergence, or this divergence confirms that move down, confirms that a bullish reversal is likely to take place. But we need to see that sell signal. In fact, we need to see that level go as well as the recent highs. If I put a horizontal line here, on silver, we had these two candlesticks here, which also line up with some support there to the left. So you need to see a breakout, a weekly close, number one, above that level, and you'd want to see silver to take out those highs from the week of March 18th. Then all should be smooth sailing for a while. But we're not there yet, so you can't jump the gun on these yet. This is a USO, divergent low, about equal lows on the PPO. And again, I'll try to get my charts of WTI up. Those are on stock charts. I can't do WTI on, or the actual underlying commodities on TC2000. That's one shortcoming of this platform. They don't have spot prices. But you can see there, divergent low, and a triple tap on the RSI. Triple tap meaning, I've pointed out in the past, these weekly oversold levels on USO are rare, and when you get those, they've led to these huge rallies. And I put this in percentage terms. It may not look like much here, but each of those where the white arrows were preceded or immediately followed by, I should say, pretty healthy rallies in crude oil. And each of these were healthy, very tradable rallies, if you will. This is a weekly chart, keep in mind, a 10-year weekly chart. So those moves might not look like much, but they were. And more importantly is when you have a cluster of consecutive readings, again, I call that a triple tap, that is bullish. So you have a divergent, low here in USO, and you just have to watch this downtrend line. There's still some work to be done. And I think the longer term case can be made and has been made for a while. I'm zooming into a daily chart here. At this point, I expected a pullback in crude, and we got it. And I expected that level to go, down to no lower than this level. And so far, that's where we went. And we bounced. This was a support line I had, and I've showed on the USO chart. You can see the MACD up here is still healthily above that zero level. You see, especially the 9 EMA, the white line. So far, so good, and that's what I'm trying to impress here is gold, silver, USO. I'll have to get to the individual, the ag commodities in another video, but I've made the case here. This is wheat. I'll just hit on them. Soybeans. What else do I need to do? NIB. Nothing. That one's a mess. SGG, sugar, So you can see those charts look pretty good. So, we've been moving up slowly but surely in a lot of the ag commodities, and that's again the theme for 2016 and beyond. Possibly is commodities to outperform equities. But I still think it'll be a trader's market. I don't think it's going to be a easy buy and hold in anything, including gold, sugar. Markets have been just all over the place, both commodities and equities in the last couple of years, and ultimately equities have gone nowhere. I think I posted earlier today the S&P I was looking. We can see here, pull up the S&P 500. Let's get a clean chart here, clean board. I'll go back a little farther. I've got clean board somewhere on this one. There we go. Okay, put a horizontal line right here. This is where we are right now in the S&P 500, and this is where we were. Actually, we closed the day last week right here. So yeah, we go back, and it goes back about a year and a half or so, where we've gone virtually nowhere. We went up a little, and we went down a little. Actually, we went down more than we did up, but the net effect is a buy and hold investor in the S&P 500, which is the most popular, in tracking index where most money is in the market, has gone nowhere since 2014. And, in my opinion, they're probably going to go lower. We're probably going to take out these lows. So we'll see. All right, guys, this has been Randy Finney with the right side of the chart. I hope you enjoyed it.